Welcome back for another edition of London Direct. I'm back at ETX Capital and I'm joined by Adrien, and we're going to be talking tapering. So Adrien, please tell me that you spotted something from the minutes which tells you know when the Fed's going to start tapering.
Well, basically the Fed didn't give any clues about how they're going to stop or slowing down QE. The only thing is that now we are pretty sure that QE is going to stop or at least slowing down by the end of the year. But definitely the main issue is the schedule of when exactly the Fed is going to stop everything.
Yep. So when do you think it's going to be? Is it September? Is it December?
It's going to depend. At the very beginning, the targets fixed set by the Fed was the economic growth between 2.3 and 2.6%, and an unemployment rate below 7%. So at the moment, the targets are not met yet. So, but the main issue is because at the moment, Fed members are divided. Some people want to stop, and some people don't want to stop. And the pressure put by the member that want to stop is getting higher and higher, so it's going to be more and more difficult for the Fed to not stopping QE.
One of the strange things that I find about this whole situation is, what if the unemployment rate stays at 7.1% and it doesn't budge? Does the Fed stick to its principles then? At
some point, I'm pretty sure the Fed has to stop or at least slowing down QE, because at the moment it's 85 billion a month. And it can't continue like that. And the Fed has been pretty smart before. It's getting the market prepared to the moment they're going to at least slowing down. So at some point, yes, they're definitely going to have to stop it or at least reduce it. The only issue now is when exactly. So most of the investors think it's going to be in September. For my part, I think it's too short in September, when it's only 3 weeks. In October, I'm pretty confident about October. So like 3 months before the election of the new Fed chairman as well. So I think October is a good time frame here.
Right, as always, when we come to ETX Capital, we like to get a double hit of interviews, and I'm now joined by Ishaq, and we're going to turn our attention to the FTSE. Ishaq, let's start by talking about the commodities story, because it's so important to the FTSE.
Absolutely.
The data out of China does seem to be getting a little bit better, so what does that mean for the FTSE?
On a long-term level, yes, it's very positive for the FTSE 100, because China's growth is imperative for the FTSE index. The FTSE is a heavy-weighted commodity index with a bulk of the index made up by the mining sector, the likes of BHP, Billiton, Rio Tinto, Antofagasta, and Anglo American. So today we've seen an encouraging move by the resource sector on the back of that, and commodity prices have also picked up on China's growth. Commodities have had a pretty rough time since we saw the first indications that China is slowing down. But now we've seen a bit of a turnaround in economic data. It is encouraging. Investors have welcomed it. Most notably now because the timing is absolutely perfect for China to pick up. Given the fact that we've got tapering possibly on board maybe as early as next month, the two positives that investors can really latch onto is, one, the Eurozone growth story. It's coming back. The worst of the recession is now over. It's in growth, and China may be getting up from its knees, and that's and the immediate hit would be for the commodity sectors to benefit on the back of that, commodity prices and the resource sector. So on the whole, very encouraging.
So where are we now in terms of the FTSE?
Sure.
There's big expectations that in September maybe we're going to get tapering in the US.
Yep.
Are we going to see the FTSE slide until then? Will we see an improvement in sentiment? It just seems quite hard to read at the moment.
Well, I'll make a few points on the FTSE. For the month, it's down about 2.5%. That's underperformed its European peers. Now, the interesting thing about the FTSE is that 70% of revenues made on the FTSE 100, out of all the companies on the FTSE 100, come from outside of the UK. So the FTSE is more of a global barometer as opposed to a UK barometer. So when it comes to how investors are reading this tapering, this impending tapering, really it's not a fear in the market, in my opinion. We're not worried about when tapering is going to happen. I think it's priced in. I think the real kind of immediate picture right now is that a lot of people are reweighting their asset portfolio, their FTSE portfolio in this case, and that's dumping some of those stocks, the defensives that are likely to suffer on the back of Fed tapering, and at the same time we have to look at the picture that the Fed tapering is in conjunction with the fact that we are seeing US recovery. So we should see more of a pro-risk, pro-cyclical move in the FTSE 100. So that means your mining sectors, your banks, your autos, well, not so much the autos, but that's mostly Germany, but of course the construction and industrial sectors are likely to benefit on that. So I do think that after tapering, once tapering is over, once you get the initial move by the Federal Reserve, we should see some positivity get back into the market. I don't think we're going to get an aggressive sell-off. We may see a sell-off in the first initial few days of the announcement of tapering, but we should slowly start seeing a normalization in the market. Also, seasonally low volume so far, and also there's a lot of volatility ahead of the September policy meeting by the Federal Reserve.
Yeah, just to finish off, you're saying that less defensive stocks are becoming more popular. So in terms of ETX clients, where are they looking? Are they looking at banks? Because banks are quite interesting.
Yeah.
All 5 of the UK banks posted profits, I think, this time for the first time, I think since 2010 or so. So at least there must be some good opportunities to buy.
The thing with banks is that on a short-term level, they're more popular with clients. On a long-term level, it's still a very risky play. Now, when you look at the UK banking sector, apart from Barclays, HSBC, who are 2 different beasts, of course, Lloyds and RBS are still state-owned. So investors have always been very cautious since the governments took over their stakes in RBS and Lloyds. They've been very cautious of these 2 banks. But the positive story, as you said, is that they are now posting profits. More importantly than that, they're on track by de-leveraging, they're de-risking their balance sheets, they're streamlining their businesses in a way that they're going to turn profitable at some point. So the long-term view for the UK banking system is one that is quite positive, but at the same time we have to remember that this is a sector that's been embroiled in scandal. We had the LIBOR case, most recently we have this energy price manipulation by Barclays. The best way to class it for the way our clients see it is that it's high risk. On a short-term level, you can make some very good profits on the UK banking system, and it's a good place to be on a short-term basis. But get out when it gets to long-term, because it's not the right place to be. There are other attractive sectors out there, attractive stocks. I would say pile more into your housing and your construction stocks. A company like Wolseley, for example, makes bulk of its profits from the US. The US market is recovering, the housing market there, and I think investors should start playing the US economic growth card. So pile into those companies in the FTSE 100 that have massive exposure to the US economy.